Hey folks, going to do a quick market internal review here for September 27th, 2023. Going to take a quick look here at SPY. Started up with a gap up of not quite $1.50 here. We spent most of this week bringing the price down across the market. Monday, I did not release a video, but mainly had a lot of a chop kind of session. We did reject Friday's previous session TWAP here and ended the day there only to gap down a fair bit. I believe this was about a $3 gap. We sold that whole day. It's quite fantastic. If you're using the market internals, it was a pretty easy read. Today's price action, basically I expected more sell, and I'll get into a little bit more detail about that on the monthly TWAP chart as to why that is. Though I am expecting a little bit more chop and resistance to move much lower for the same reasons as just mentioned. So coming into today, seeing the gap up was somewhat humorous to me. We got the typical tick confirmation on the gap high, tick high to open up. Now we did have a trend imbalance, which gave me a little bit of curiosity there with the potential for perhaps some kind of a trending move. However, I know better, and I've seen this enough times where when we're resting right above that gap, as soon as we start testing into that gap, I'm kind of expecting more of a gap fill. If we go and review the ad chart, you'll see as well that rather fast we lost 1500. So we were in the extreme bull zone and we couldn't keep it there. So once we had that rejection or breakdown rather, I'm looking here by 10 o'clock and expecting a rejection and continuation towards balance on the ad chart or potentially even lower. So that's exactly what happened. And by 10 o'clock, what were we doing? We were breaking Tuesday's TWAP price here of 426.8. And now we did wrestle with this daily gap for quite some time. We had a beautiful entry for TWAP traders. If you follow the guidance from the video I published on how to use TWAP to find what seemed to be pretty consistent trading opportunities, you get the break and retest style entries. There was a couple of entries actually here today. You can, at least I use TWAP as a kind of a trail stop, and you had a couple of fantastic trades where you've got the TWAP price target levels, and we actually hit every single one of them today. So this trade taking you all the way down. This one here captured a 9-to-1 risk to reward trade, and that was a $3.18 move that was caught. And then the trail stop being TWAP actually took you well into profits, which greatly minimizes the risk on the table depending on how you trade. So we did this breakdown. We had these insane engulfing candles just obliterating all this previous structure, really making a statement. As I try to call these like statement candles. There's many other industry standard terms for this, I'm sure. But you see how we can't break back into that gap, and we just continue. You actually had another first standard deviation breakdown entry per TWAP, and the only thing about these is that your TWAP line is a little bit further up, so your risk to reward is not as ideal as it was over here. That being said, it's still a pretty darn good entry, though you're already past one of the targets. Now, these lines I've recommended in the past can be scalp targets. They can also be entry targets as well. So if you see a proper candle structure, breakdown, and rejection setup, that's a great way to use these as well. I always expect reactions around these levels. So today was just a phenomenal day. Now, about 11:30ish, we started to see a little bit of hint of trend balance. And notice though, we already kind of had that indication from the ad and volt bands and their trends. Lots of divergence here. When you see that, that's going to be chop for sure. And then, as I've mentioned in the past also, is just because you see a trend balance kind of indication from the market, It does not mean that it cannot trend in a particular direction, just that it's probably going to do it in not so in a rough manner, right? It's going to deliver it with lots of potentially 180 reversals and golfs. It's going to have lots of pops. It's going to make it incredibly confusing if you don't understand why the market is moving the way it does. Thankfully, if you're using market internals, if you've listened to all the content that I've shared, you should have a much better understanding of what's going on here. Albeit anybody brand new looking at all this is probably maybe going to throw up. I don't know, but so I'm watching this downward channel and just kind of chuckling because I can see all the divergence in real time happening live with the New York Stock Exchange, and it just, to me, it makes total sense as to what's going on. Now, obviously, we don't know how low it's going to go. We don't know if one of these pops eventually will kind of settle the score between who's going to be right for direction on the end by the end of the day. But it was pretty nice to watch this, seeing the oscillation, seeing the extreme sell side here on the tick. That pretty much cemented in my mind that shorts were going to be continually in favor, at least until I saw a hint of anything else. Now, what we did see here was a mercy squeeze. If you're using a market internal RSI, this is using New York Stock Exchange data, not your typical RSI data, although it does have that built in. If you want to enable that, you can do so. And one thing to note is we had one squeeze here. It did provide a trade. If you look at when we finally had that crossover, I'm going to go ahead and turn symbol RSI off. We had that crossover about here, and we did have a little micro scalp all the way back to this TWAP level. That's all the more I expect to get out of these. When I first developed this indicator, I kind of had hoped to grab maybe something a little bit better with these style of alerts, but I just kind of take what I can get, and I don't try to hold it for any kind of trending move, especially not in a trend balance kind of day here per MIT. But still, nonetheless, very cool. Nice little scalp. Heading into the latter half of the day, we had some spicy things occurring with all of this selling here in the strong bear tick. We started to see from Mercy the oversold kind of indication here. And we don't get a Mercy squeeze. There's still some divergence between the New York Stock Exchange and SPY, but we are starting to see more crossover. We're starting to see that RSI come up, and then we start to see the trends flipping on the New York price and volume. So it's getting to be a little bit interesting here. We get a zero cross on tick average closures. Notice we start to make a higher low on the tick right as we start to reclaim the first standard deviation low point here on the session. And then we really start to rip. Everything's flipping green. We're starting to get extreme closures. We're starting to see mercy squeezes. And then all of a sudden, in no time at all, we flip to overbought. But they still continue to go up. Now, they did manage to go all the way back through the gap. They cleared the previous day's TWAP, which had recently provided, or earlier in the morning provided support, and then flipped to resistance. Just a wild time seeing all this in real time. I did manage to catch this reversal setup with a nice little bit of SPXL shares, so that was a lot of fun. And just seeing that by the end of the day, we had almost a complete V, and I think to finish the day out, SPY in total moved about $1 down. So just incredibly wild. We'll look at kind of what happened here as a funny signal. A couple of my friends that are trading with internals, they noticed it. And so about that time reversal, I always show the 200 SMA on Vold. And I mean, right around that 130 time frame is where we started to see that 200 SMA bounce on the Vold. And then we also had the ad, which had broken down and then reclaimed it by about 2:30, I think it was. So right about on that hour flip. It's one thing I've noticed is that every hour is something that just really seems to trigger an event of some kind. It's also over in the EU session, over here is our close is an EU session close. So it's just a very important thing to always keep in mind is every time there's an hour flip. So the market opens at 9:30, pay attention to 10:30, 11:30, 12:30, 1:30, so on and so forth. So you'll start to see that and start thinking and compartmentalizing each hour of the of the regular trading session as kind of its own session, if you will. And each one of those hour candles, if you're trading on the lower time frame, can provide an opportunity. So just something interesting to note, though, is that the Vold bounce 200, the ad bouncing 200, pretty much coincided perfectly with this rip that SPY decided to go ahead and do. Surprising what's unfortunately is probably a handful of people short in the market. So heading over to VIX, something I wanted to call out is we have become quite close over to 20 on the VIX. We are starting to hold VIX higher and higher. It's taken its sweet old time. When SPY was dumping, or ripping rather, VIX started to dump and basically closed roughly about the same place it had opened. But we're around 18-ish, so that's a pretty solid upward channel here. We're not quite to 20 yet, but just want to call that out. It's something to think about. We've got some economic news coming out. I think GDP and I don't know, lots of other stuff. And it's going to increase volatility. I know that everybody and their brother on X and YouTube, they're all talking about various higher time frame charts, key levels, and things that are all breaking down. So you can just tell by that. Sometimes the indicator is not on the chart. Just look around and see what people are panicking about, and that can tell you a lot about what the market may do. And so at these extreme lows, relative speaking, it could be opportunities. So looking at the New York Composite here today, we really struggled to keep within these monthly TWAP levels. We've struggled with the previous day low here a handful of times, and then we finally closed back in that range. So the Monday video that I did not shoot, I had been kind of continuing the same sentiment from last Friday's review, which I released on Sunday. How we continue to drag down these monthly TWAPs, we continue to expand the first standard deviation range, and I mean it really hasn't stopped. Yesterday, we basically rode the second deviation low on the New York Composite the entire day. And I think I had already mentioned it on Sunday's Friday review video. It's confusing. That we basically had run out of August TWAP based price targets across all the indices, save for Q. So SPY is still well under, but I mean we're real close. But continuing to expand the range for this month, and then Q's has been the one that has been holding us up. I feel, anyways. And I mean, today was amazing to watch the Qs. We had a perfect monthly TWAP rejection, or level rather, on the monthly TWAP. And then, a couple of session TWAP rejections. This level down here is second to last level for monthly TWAP price targets at 350. It's a perfect whole psych number, as well as some often refer to them. And we didn't hit that one. We hit 351.5, and then that's where that whole market decided to rip for whatever reason, and it just had really great alignment with this. We did reject this one here before we closed within the gap, which I thought was interesting. The Dow sold off hard today, mostly in line with SPY. Had that same kind of reaction around that 130 time. Not much to write home about there, but still just continual downtrend. I'm predicting, with very few days left in September, that we're probably not going to head down any lower. I would kind of expect to see us head into the August range, these monthly TWAP levels, just a little bit. I don't know that we'll be able to break back in the first standard deviation on September's TWAP or not, but I wouldn't count it out either. Russ is getting quite close. They were actually one of the strongest names today, I noticed, as they kept their gap. They didn't even, quote unquote, fill the gap all the way. And while they did have a down move, they basically had that up move that the other indices had. And, I think overall they finished higher on the day. Yeah, 60 cents, which, Russ doesn't pull massive numbers, or at least IWM, whatever you want to call it, but that was pretty impressive to me. So unless the economic data that comes out is going to be awful. I'm I'm kind of expecting just a little bit of a bounce, but nothing spectacular. I wouldn't think so. I did see a tick up in the 20-day S&P growth stocks. So 20-day average, we dropped 6% on it the other day, and then today we brought it back up. So, I called out that, maybe this was kind of the floor. Well, that wasn't the case. But one thing interesting to observe here on this chart is we have tested that monthly trend line that I have had for quite some time on this chart. We definitely we definitely drug it well below, but then we had that violent reaction and brought it all the way back up, and we actually closed above yesterday's close. So this line pretty much has been on point. I said that I expect some kind of a bounce from Friday. We did receive that, and then I said more of a down move. We have received that. This one here, yeah, we gapped up to this level here. So whether or not I would count that, I don't know. We did get the down move. So if we end up getting this, I'm going to say I called it pretty accurately. It'll be interesting to see where we end the month. But if we head down lower, I'm still not going to be surprised. But I think for the end of this month, we'll probably end at least flat, maybe slightly up. If we're going to go into seasonality where October ends up being decently green, then what could be happening here is that we've tested this monthly trend, or you could say 200 SMA. There's a lot of confluence. There's probably many things I don't even see around here. I'm absolutely certain of it. But let's say that we finish this up and then we'll hold this and then we start to move up. We've seen this before, some dirty breaks kind of around that 200 SMA here, kind of around here. So it's something to think about. Also, just thinking about quarterly kind of trading, quarterly business cycles. If we look at October, past couple Octobers, save for 2018. But if you look at a lot of these, the Octobers are all green. So we've had doji Septembers. Well, I should say doji quarters. But there's the quarters that start with October, on average, look to be here recently, anyways, quite green. So depending on what all happens, I'm kind of expecting maybe a little bit of green here as we head into the final quarter of this year, which is incredible to to think that this year is almost over. So as far as the ad goes, we had bullish volume to end the day. Well, I say neutral to bullish volume, and then we had essentially, I'm going to just go ahead and call it neutral price. So quite a large move down, but overall New York Stock Exchange still kind of trying to hang in there. And volume at the end of the day, we had MU earnings. I doubt that moved the market at any significant amount. Yeah, so basically flat. So maybe we'll see this 200 SMA volume trend continue into the next day, and maybe we'll have a little bit of a buy tomorrow. But obviously nothing guaranteed. Stay safe out there with trading around news time, and I hope you've been doing well this week. Thank you for watching, and as always, happy trading.